Happy Friday, everyone. Today's the last day of Beaver Creek for anyone who is down there at the Precious Metal Gold Show. Lots of great interviews coming out, not from us, but from Kitco. We didn't go this year, but some great interviews. I would encourage people to go take a look. A lot of you probably already have. And that's why we wanted to talk, about gold some more, precious metals in general, because we're in this chaotic time and there's such a robust outlook for it. And we want to, here's the kind of the funny thing too, is we sometimes book ideas for topics a bit in advance. So we wanted to talk about semiconductors and them coming off a bit, which they did last week, and the markets were down a little bit. A lot of, poor news from Intel. Intel's, struggling. And then, a little love was lost for Nvidia with anticipation, but the people are anticipating a 50 basis point move in the US and saying that could be, that's the correlation of why the markets are up. I think it's 1.3 trillion has kind of muscled its way back into the market this week alone. But like I said last week, I think Nvidia was down about 14%. Broadcom had dropped about 10%, and we won't pick on Intel too much because it is really struggling quite a bit. And there was a bit of a shift in sentiment around, the amount of spending in AI. And you can't, go through the internet at all, and look at markets or stocks without seeing some sort of spending in semiconductors and chips and how vital that is, particularly in the West. And this is part of that struggle for power. And let's lump it all together, whether it's, foreign currency, the US dollar hegemony, energy, or computer power, AI, semiconductors. This is all, let's say, big threat, soft threat. It's a conflict, right? I mean, it's power. I mean, at the end of the day, between the West and, say, particularly China, but also developing this BRICS story. Now, specifically about the semiconductor stocks, and we're not going to get into in depth. We don't really cover that space too much. I like to look into it because it's fascinating and to see the sheer volume of money being spent, and it's critically important. I mean, along with AI, these are arguably, possibly the most important, because if AI does what it hopes to do, promises to do, may be able to do, we fantasize that it could possibly do, it's going to solve a lot of problems. It's going to help. If it has the breakthrough of being able to find a new way of quote unquote thinking, like have the actual ability to cut on energy, cut on the scale side of things, then there's big things ahead, and we like that because it focuses a bit more on the hope for the future kind of idea. But we wanted to talk about this in regards to gold, because you'd say, well, they're correlated, but not strongly correlated. Because they represent very different parts of the economy. And I don't mean the base metals, which one could argue are positively correlated, because you need to have all of these battery energy metals. The story. I mean, all the stuff that requires in that, whether it's nuclear as well. You need all of these metals. Most of you know this at this point, but we once again, we're reiterating things to try to get new people to listen, new people to pay attention, to kind of really hone down on that message that, in order to make this, you need this. In order to have this, you need this. And where is this, say the metals, where are they coming from now? Where are they being produced? And if we're having this big conflict about chips, well, then we'd better have a supply of all the metals, because if it's all coming from China and you don't give them what they want over here, well, they're going to put tariffs and they're going to put things on over on the other side that escalates the issues with the global economy. And that's the big narrative when you hear, say, an investment banker or a BlackRock or someone on the big money side of things. They don't want any issues with China. They want there to be a free, open flow of money back and forth, because that keeps this game going. I mean, those trades, mean a lot of money can flow into developing markets, and likes of, say, China and India. Although China is under lots of issue right now as well, those are huge markets that they want access to. And if you start cutting them off, it's problematic. They don't like it so much. They're less interested, generally speaking, people that are that level of capitalists. They don't really have any allegiance to politics, to country, to any of these other notions or nations, anything like that. It's not really their strong point, which is fine. I mean, people that's just and that's a very broad generalization. But it's important to know the motivating factors when you consider someone, say, the Biden administration, who says, well, hold on, wait a second. We want there to be trade. And I agree with this as well. So this isn't a critique. But we also, we don't want to be beholden to any country. It doesn't have to be just China, to any of them. We want to be able to make sure that we control our own destiny. And every country should want that. And if you can't do it, well, then you should align yourselves with those that are your best neighbors, best friends, have similar cultures, same attitudes. This is common sense. Although one could argue nowadays common sense has gone out the window for years. In any event, gold is, not considered growth, obviously. I don't think anyone would question that. Although you would say how it's behaved, even since 2001, has been pretty strong growth. It's beaten the S&P over that 20 years. And that as being basically as near cash as you can get. And that is on its own a very interesting fact to consume and to look at. And we like to make sure that we come back to this precious metal story because it's not going away. And that's just not us. And when I say us, the likes of the interviews you'll watch on Kitco, it's kind of a consensus from everyone. And as that consensus, let's just take a look quickly at, say, Goldman Sachs. So here's a big investment bank. They're not big gold players. It's not their thing. But they have recognized that the price of gold has gone up by 20% for the year. And they expect it to go up to about 2,700 next year. And they believe that whatever the rates are that get cut, that's just going to help. So they're not kind of saying exactly when, but they're expecting 2,700 next year at some point. I think that is very reasonable. I think we found this 2,500 as being a level, and it's not over. And that they seem to be thinking the same as well. What's interesting, though, and we're not going to go into too much detail because I'm cognizant of time, is that the reported and unreported gold net purchases by central banks is a very interesting graph that they have here. And overall, Goldman Sachs research strategist Samantha Dart says, in the softer cyclical environment, gold stands out as the commodity where we have the highest confidence in near-term upside. This huge unreported purchases by central banks, that's curious. We're gonna look into that because I mean it's a giant amount there. Who's that? Who's buying that? Is that China? They said that they're not doing it. Buying. We know Russia is, and we can list a lot of the countries. A lot of these BRICS countries are buying a lot of gold. So that narrative, whether or not you think it's as drastic as, yes, there's going to be BRICS, they're going to have their own currency that's going to be backed by this, that might be a long-term play. And we can go off on lots of tangents, but what we know for sure is that it is happening to some degree. It isn't just like a back end of the shelf story. And I'll bring it up again because I like to bring it up. If this had happened, and it couldn't have happened 15 years ago. So let's just start with that. If a bunch of other countries had said they're coming off the US dollar, the US would invade. I mean, I know being a bit harsh, but they would. They'd be like, no, you're not. They've done it before. Arguably, it would be the cause of many conflicts of saying or hinting, we're coming off your standard. So we're gonna show you what that means then. But now they're openly not only chatting about it and quite comfortably, there's no response to it. And that's interesting. That should be the story out there, but it's not. And I don't think there's a conspiracy about it. I just think that there's so many stories of that nature right now that it's hard to follow. And because so many of them are at this kind of outlandish level of, could that really be happening? Is this happening? Whether it's AI, whether it's nuclear fusion, whether it's BRICS, that there's so many of these that you go, well, what is just a possibility and a conspiracy and I don't mean conspiracy theory like it's not true, but what's real or what's just like a head fake? Like, is this actually going to happen? Are they developing this? Like, will Bitcoin play a role in the U.S. finances in a real way? There's so much out there that people are trying to get their heads wrapped around, while so much is changing, both on a good and a bad, and never mind any political issues. It's amazing. Like, it's quite a time to be alive. I think everyone would admit that, regardless of the stress, the strain, the uncertainty. It's a lot to take in. And when there is that, and this is why we urge people to reach out to a bullion dealer or your broker and talk about ETFs of gold or precious metals, is that it's worth that conversation. So few, especially in the West, bother to look at gold. Because it's not promoted well. It's boring. It really is. But often those boring sound businesses can be great. And certainly you're not too late to the party. You can look here, say at ING. Let's take a quick peek at ING. They have their article here. Gold monthly rally is just getting started. Once again, they see a price average of about 2,700 as well for next year. In part because of rate cuts and whatnot, but that's another pretty large investment bank that has a high hopes for gold here in the future. And I'm going to take just a step back because I missed one person here, and this is for Adam to pull up because I went right past him and I shouldn't have. It was a Kitco interview where it's Ronald Peter Stoeferle. Stoeferle. Sorry, I get the name pronounced wrong, and I apologize. In Gold We Trust. He puts that out every year. This guy knows gold. He is. If you want to read something about gold and get a great understanding, I'd urge you to go check him out. Go look at In Gold We Trust. It comes out every year. And he's saying that it's a bit of a clickbait title, like 4,800 gold. But it's good to watch because that draws like, oh, wow, really 4,800? That's what he's expecting by 2030. So his 2020 report kind of set the stage, and it's on track so far at where we're sitting right now, 2024. And he highlights that in this conversation, saying, listen, we're at the milestone I expected to see where we are right now. We see it incrementally jumping by 2030. And that's a great time for gold. Now, whether or not it'll do that, that's hard to envision that far out. But once again, if you want to see someone who knows something about gold, In Gold We Trust, check it out. It's a great interview too. I urge you to watch it. He's been on track so far for the last 4 years. So that's something to definitely take a look at. And, once again, it's not correlated. There's no strong correlation either way. But sometimes where it's interesting to look at these things is that all the other mitigating factors that come into play when you're looking at gold, whether it's like how much is the country spending on infrastructure, how much are they spending or issuing debt to do, say, chips, to give to money, how much money are they giving out for this, for that, and for that, and these kind of trade wars or technology wars are escalating at a huge cost, and even for people to say, well, this is dangerous, the amount of money we're spending. One could easily argue as well is that if you aren't the company that gets a handle on energy, that gets a handle on AI, and you're not the winner, then you're arguably the loser. And that could have massive worldwide ramifications. So just something to kind of keep in the back of your mind. I wanted to do a little bit of a pivot here too, because I always want to bring it back to narrative as well. And let's see if I can get through this fairly quickly. And I always, whenever I say that I'm going to be quick about something or fairly quickly, I tend to ramble on too long. So, but I'll do my best here because it is major news. And I want to jump into this lithium. It's unloved for a while. Lithium is down. We see one of the biggest mines. I think it's responsible for about 5% of global supply, Chinese mine. It's owned by CATL, cattle. I like to call it cattle. What does that mean? Well, it means that especially Australian lithium producers started seeing a bit more love. And if you've been in the markets long enough, especially cyclical and mining stocks, Yes, if you're a producer, it's challenging right now. A producer in nickel or in lithium and some other commodities, because there is a bit of a slowdown right now, without correction or incident or any of that, any idea like that. There just is. And we see that with this. Now, does that mean that we're not going to have EVs? Does that mean we're not going to be using batteries in the future? No, of course not. That is still a macro theme. But right now, they're getting hit a bit. So if you haven't looked at these sectors before, if you have interest in them, arguably now is the time, if you're especially a contrarian, to be looking at, okay, what kind of lithium projects are out there that are especially going to focus on the West again as well, because our thesis is that the West is going to need and is going to require its own direct stream of minerals and metals, and it cannot rely on China, and it shouldn't. We need to be bringing a lot of this manufacturing, production, all these things back with as much care as possible, without starting a major trade war or antagonizing too much, because you want even your opposition, your opponent, or your country that you're not as great diplomatically, you want them to be thriving as well. You don't want to punish them too much, because that just ends up being escalation towards an actual conflict. So you want like a win-win as much as you can, but you also don't want to be at where we've left it right now, where we're so far behind the energy race with China that it's disturbing, and they know that, and they're kind of holding that tightly. And let me know your thoughts if you think that's true. If you think we're behind, or you think that, say, the lithium shutdown, is that solely because the EV sales are poor, which they are? Do you think that's going to have a knock-on effect to all these other battery storage gigafactories, all these other battery plants? Will that have a knock-on effect? If so, what that could look like? So I'd love to hear your thoughts and any questions you might have on that. And then I want to jump into three quick things here, because we talked about nickel and then coal. And this is kind of around, well, before we get into the coal, the nickel here, Indonesia nickel, that's, Tesla sources out of Indonesia. We've talked about it a bit. If you are an ESG person, you believe in that narrative, that kind of, we're doing this for the environment, then it's a head scratcher, because they don't have strong ESG there. They just simply don't. They're kind of known for dumping into the ocean. It's not great. So once again, this is why, especially in the West, you can convince us to spend more money to do things properly. We want to. If it's a company that's out of sight, out of mind, in a jurisdiction that doesn't require you to really, have to do things, well, then companies will often just do the negative. They'll just do it. And that's unfortunate. It's sad, but it's a reality. So they're seeing that Indonesian nickel, that labor issues could be a problem, because there's lots of different issues with the U.S. Department of Labor, because the Chinese are invested heavily in Indonesia. It's close by. It's their neighbor. They can get it right from there. It makes sense. And you have to, if you want your EV supplement from the U.S., it has to be sourced out of critical metals that they agree with. And once again, that's a huge conversation that people have pros and cons for on the kind of trade issues. But I want to jump past that as well, because this is interesting, is looking at also Indonesia coal companies. They're going on a buying spree for Western coal mines. Now, this is an interesting question. Why is it that Indonesia is going and buying all these coal assets? And we see all these Western countries selling off their coal assets, and they're not because they're not using coal. This is also a narrative that people seem to be missing, is that it isn't that we're not using coal. In fact, if we look up the next article here about, and I'll wrap it back to this one, China has more than 1 billion tons a year of new coal mines in the pipeline. So wait a second, hold on. Why are these countries allowed to use coal? It's just that the West can't. And that's hammered home. That's constantly hammered home, that, if you're Canada, US, Europe, you can't do this, you can't do that. It's just nailed. You're terrible for doing this. So I was curious to know what your thoughts are on it. I know there's a wide range of thoughts and theories and whatnot, from And I would say that some of it is because there's no one coming out saying this is why we're doing this. That's one could be honest or truthful or whatnot. And the level of information that we have is not great on these types of things. And whenever you look at some of these political organizations, they're political organizations. First off, they have an ideology they want to push. And is the narrative of the climate and the environment just part of the story, or is it actually something of real concern? My question would be, well, if you're just saying developing countries can use whatever energy they want, coal, doesn't matter, oil, they can use all of these ones, but the West can't, well, then your E of the SG, the environmental, is not real then. That's not actually part of the story. If you're only doing the E side in the West, then that's not really part of the story. And I want to kind of follow this up with a quick thing here that I put into ChatGTP just for fun. I thought, you know what, people have been playing with, all these kind of large language models for a while and asking them that. And we know, and I can prove to you, I mean, there's plenty of articles, whether it's Wall Street Journal, Google, you name it. These are biased models. They're kind of that progressive globalist narrative. That's what these models are based off of. That's the information that they want. They won't answer certain questions if they're sensitive of any kind. So I thought, okay, well, it'll be able to tell me why is it okay from a UN, World Economic Forum, BlackRock, globalist perspective that developing countries are allowed to use coal or any other energy they want. So it came back with some interesting things, and I can't go through it, it's too long, but it said developing countries need to use their natural resources to fuel economic growth and alleviate poverty. The globalist perspectives may support this as part of a global push for economic equity. So Western countries are more advanced, so they should face stricter scrutiny. So they should get a pass that way. Also, Western nations are expected to be ahead of any other because of their historical emissions. So it's okay that developing ones can, because we've had a head start, even though we're the ones who created all the technology. So once again, this is a narrative. It's not like a scientific thing. This is all political ideology. Also, it says that resource-rich developing countries, like Indonesia, they may think that the supply and demand in the international market is more important than discouraging those countries from being critical suppliers and expanding their own coal operations. Also, developing countries acquiring coal assets is viewed through the lens of sovereignty and the right to self-determination, whereas Western countries attempting to buy a coal mine in another country may be seen as counterproductive towards sustainability. So if anyone wants this, type it into ChatGPT and ask it, but all you'll see is the more of a Marxist doctrine. That's really what it is that it's equity over equality, where you have to say, listen, well, we've had a head start, and even though we've created all these technologies, when we did all this, it's time for us to take a step back and let them do what they want. And I wouldn't argue with that. I think it's important that developing countries get a good, strong, clean energy or any energy, because that will lift them out of poverty faster than anything else. My argument would be, you can have Western countries deliver liquid natural gas, which is a lot cleaner than coal, but that's not on the table, because once again, we don't want a Western company to be able to make money off this. We want it to be some other. So once again, is this actually about the environment? Is it actually about getting numbers down? And if your ChatGPT is telling you this is about economic equity and political ideology over anything ecological or environmental, that's telling as well. So I thought that was interesting. And once again, play around with it. I'd love to see your feedback and let me know what you think. And I know some people are going to go, Andrew, please stop berating us with this. We all know it's a political ideology wrapped in the idea of environmentalism. And I would say, sure, that's a possibility. I think that a lot of people who are really environmental protection type of people who really love the environment, don't want to hear that. They don't want to look at that. And there would be a lot of people in this movement that would strongly disagree with that. And I want both sides to hear that conversation, because it is important that we, even if we just look at it being, would you like clean air? Yes, I would like air to be cleaner. So should we make that a big goal? We absolutely should. And if we could drive a car that's a bit cleaner, is that a good thing? Yes. Now, of course, what it comes back to is at what cost? So then it becomes, well, at what cost? Is it the end of the world? No, it's not the end of the world. Can we do things better? Yes, we could do things better. But once again, when you look at all these issues and the narratives entirely and in their entirety, there's holes in it. And not only is there holes in it, are these people who are putting these ideas forward, are they actually the best as far as a meritocracy, the smartest, the best planners? Are they the very best at being able to deliver these objectives? And I would say almost guarantee that it's a no, a very strong no. But let's end this thing on a positive note. Let's look at BC. So BC government news, and this is good. This is a big news story. Completion of electric highway makes EV travel possible throughout the province. Now, this is a very good first step, and it acknowledges that they have, I believe, 155 charging sites and more than 310 fast chargers. Some sites offering additional level 2 charges. It's their completion of BC's electric highway by summer 2024 fulfills a big critical commitment of Clean BC. The province is working towards an overall target of 10,000 public charging stations by 2030, and more than 5,300 public charging stations in the province. That's like 350% over 2018. So this is great. I mean, we want to see, like, where's the infrastructure? Now, I'll play devil's advocate here as well, as to remind that we don't have the energy to sustain that. We don't have to go all electric. It's not there. There's not enough source of energy. So on that pipeline should be, are we going to be using liquid natural gas more? Are we I mean, is it going to be like hydro? And if it's so, I had one engineer say it would be like 7 or 8 Site C dams if they wanted to go all electric by 2030. So imagine that conversation that everyone in the province would have. Like, if we want this to happen and to have enough power to charge all these things, that's what required. Or are you open to nuclear? So it's good to see that this is developing, that it is coming along, that there are steps. And this was not easy to find, this BC one. And it's good news. It's great. And I wanted to end up with something positive. And let people know that this is coming along. But what do you think as well is going to be the power requirement in order to make this happen? Because we're very ahead of the curve as far as EVs, and we're very cognizant of our environment, and that's a good thing. But we're also barely dented. I mean, we see Teslas everywhere. If you're downtown, you see quite a few, but it's barely penetrated in any way, which means, yes, there's a big upside. But what do you think the energy toll of that is actually going to be, and where do you think it's going to come from? So some big questions to think about over the weekend. Love to hear your thoughts. Have a great weekend, and let's check in with you next week as well. Take care.